All right, very good. Well, welcome everyone. My name is Annabelle Pacheco, and we're here today talking about multifamily investments and just a little bit of information about myself. I've been in real estate for 20 plus years, started in the mortgage industry, and then worked my way into the investor position where I was buying homes, rehabbing them, flipping them. Did that for some time. And when the market changed, felt like, it was a little harder for me to find deals, decided to go into the restaurant business, which was not easy, but you know what? We managed to invest, put our money into that, and we had no choice but to make it work at that time. And we did. It took 7 years for us to actually build and create a profitable business for us to be able to turn around and sell. And after that, that was about 2010. And then, just again, went straight into working real estate, but working retail with, I'm sorry, I'm letting a couple people in. Went into the retail part of the business where I was just helping clients either sell or buy, and did that just really, I would say, I said, you know what, I'm going to become that expert, and I'm going to become that professional that really helps clients in representing them. And so I did that and had a 5-year plan that I wanted to buy multifamily, and went into the multifamily space in 2015, purchased 34 doors out of state. So I live in California. I purchased a property in Dallas, and we bought a value. It was a super value add opportunity. I just, in a nutshell, I was able to get seller finance. It allowed me, I got a 2-year note from the seller, and that really just allowed me to rehab the property and then go out and get a loan. So it took about 2 years, and the property at that time had pretty much doubled in value. So I think I did things right at that time. And so we just continued to improve the apartments, the units. And I went full cycle a couple years, maybe 2 years ago, sold it and invested, did a 1031 exchange into another deal, not multifamily, but commercial deal. And we're, currently working on that. I also want to introduce my co-host, which is Paul Kraus.
Sorry I'm late.
It's okay. He's actively involved in a multifamily, and I want him to share what he does so that you guys know pretty much kind of what we bring to the table as far as experience. Go ahead, Paul.
Sure, yeah. Thanks, Annabelle. And hi, everybody. It's the last day in LA that's going to be 80 degrees, so I'm excited. I just got back from Arizona where I have a project, but I am mostly actively out of state. I do almost everything out of state with multifamily, and several projects going on right now in Chicago and in Arizona. And want to share that without any question, a big part of what I do is assemble teams to put together projects that will improve properties, that will make them much nicer to live in for sure, and with a lot more amenities for sure, and essentially help investors put their money to work in stable investments, mostly multifamily, which is why we're on this call today. And occasionally it'll be a multifamily upstairs, and it'll be a mixed use where it's a retail downstairs. So that's what I have going on right now. So I have projects in Chicago, I have projects in Arizona, and looking to educate folks on what we do, get you guys excited about what we do. And if you are excited, we'd love to team up at some point and talk about how we can all be on the same team. So thanks, Annabelle.
All right, thank you, Paul. So just kind of wanted to let you all know that our guest speaker here, I met on actually one of these calls. And we've had communication ever since, and it's probably been I'd say at least a year. We've been in contact. He'll run different scenarios by me or opportunities by me, and I just want I want you guys to know that this is what this platform is for. You're either gonna like the person that you hear talk, or you maybe connect with them, and maybe there's something that can be worked, amongst either a couple of us here or all of us, or maybe one. So I just want to put that out there, that this is really why we do this call, right? We're trying to make connections with people. We're trying to see how we all can bring value, come together, make something work. So Miguel Dags, he's involved in investments. And, I spoke to him about a year ago. He was working on a project out in the, is this Napa Valley area? Miguel?
Sonoma Valley, yeah, so very close.
Okay, Sonoma Valley, and I wanted, at that time, he was looking for investors. He found the investors. And in talking to him, I said, Miguel, I'd love for you to come on our weekly call and share the outcome of this project, because I think it's important for people that are going to invest to know, right? Like, okay, everybody brings you an amazing deal, but then you never really hear how amazing that deal was or how terrible that deal was. We never know. So I've invited Miguel to come here today and speak. So Miguel, share a little bit about who you are, how long you've been in business, and what you're doing right now.
Yeah, absolutely. And I do have a slideshow presentation too,
Awesome.
to kind of go over, the deal and kind of how we work, and, to answer, just give like take something that could be complicated, but make it simple. But basically, my background is I bought my first few investment properties at 19. Didn't really know much about what I was doing, but the moral of the story, I just kind of dug in and started on the project management side of it. Things didn't go great, but what happened was it led me to learning more about not only real estate, how it works, and so my journey has been, wow, now 20 years now. So um, so
Wow.
I've learned a lot about, project management and real estate. But then on the other side, I have about ten years of hospitality experience, working in Sonoma Valley, and so does my wife. And so we teamed up together, and we have a vacation rental property management company. And one thing that we've noticed is Airbnb is getting a lot of bad press, and we've been able to find a business model even within that, to create assets that are not only increasing in value, but then also, producing income on a, sometimes daily basis, but monthly basis for sure, has positive cash flow. So this is just something that I wanted to share, how we took our experience in real estate and vacation rental and put it together to make it work for our investors, how it make it work for us. I don't know if there's any way to make me the host so I can share my screen here.
Um, you should have the option to share. I mean, does it not give you the option? Let me see
Can
here.
you see my screen okay?
Uh,
Let me actually pull up the PowerPoint.
Does it give you an
Can you,
option or
I don't
no?
know if you can see my
No, we can see
you know
you.
what? It actually doesn't give me an option. It just says
All right.
whiteboard here.
Let me make you co-host for now. I'll come back to you, Paul.
Okay.
Okay, try now.
Yeah,
Okay.
he's a co-host now.
Okay, perfect.
Let's see. Okay, so it's letting me record. Let's see, where can I actually show my screen? And then Annabelle, I did, just in case we had any challenges, I did email you my PowerPoint too. Um,
Let's see.
I don't know if that helps us anyway.
Give me a second. Oh, wow.
Let me see.
Did you just send it to me?
Yes.
Um,
Can you see? Can you see this? I actually have the PowerPoint pulled up. Can anybody see this?
No, you need to share your screen, Miguel.
yeah.
There we go. It's not. I had a challenge with this on Zoom last time, and it wouldn't let me share the screen here.
So you should have
Oh,
a little green button where it says share your screen. And then when you
oh,
share your
here we
screen, you go to your page and then you need to mute. You gotta your not your call, but the other where you're sharing this from. Perfect.
Okay, can you?
That looks great.
Looks perfect.
Looks great. Okay,
Yep.
Yes.
perfect. All right, great. So basically, we are Vineyard Vacation Homes. We're in Sonoma County. We're strictly in Sonoma County for a number of reasons that I'll go through the PowerPoint here. There. Are you hearing me clear, or is it an echo?
You're coming through great. Like we can hear your voice just fine, Miguel. So just continue.
Mm-hmm.
Perfect. Perfect. Okay. As long as you're good. Okay. Perfect. So just a disclaimer that I always give: this is for educational purposes only. This is not for financial, legal, professional advice. This is just what we do with our investors. Okay, and then our mission.
Uh-oh. I think the connection is it's
Miguel,
not.
you're cutting out.
Yeah, you're cutting out.
Is to give a luxury.
You're cutting out. We can't hear you.
Is this better?
Yes.
Can you hear me now?
Yes. Yes.
Not only are we providing a luxury experience for our clients, but every reservation that comes through, we're actually donating to a nonprofit that feeds over 500 families.
Cool.
So our mission with a cause. And then I gave you my background already about myself and my wife's background, so we'll skip that. Okay.
Yeah, something's.
Miguel, can you hear us? Because if you can hear us, you are
So
freezing up.
basically,
Miguel, if you can hear us,
we
we
go
want to
through
let you know that
property
you're
value
freezing up.
enhancement. We help boost tourism.
I think you need to mute.
Yeah, I can hear you.
I think you need to mute your vacation rental management presentation, whatever that browser is, you need to go to that and you need to mute that because I think that's what's maybe kind of lagging here.
Huh.
Okay, let's see. I mean, we can hear you now, possibly. Let's see.
Miguel, is that PowerPoint or is that an online application?
Oh. Sorry, everyone. We're having some technical issues here.
Yeah,
uh,
Miguel, we can't hear your audio.
at all. Yeah.
Okay, is it better?
That is.
Yes, that is.
Okay, so we'll stick with this.
Okay.
Okay, perfect. So I left off. Basically, we're in a property enhancement market,
Okay.
boosting tourism and making profitable investments. Are we still doing okay so far?
Yes, we're good.
Okay, perfect. So our winning formula is what we do is we acquire distressed properties. So we usually find our properties between 30 to 50% below market value. And how we do it is exactly the way Annabelle talks about. It's in value add. So for an example, we'll find a distressed property on a large acre of land and we'll add square footage, we'll add an ADU, whatever it takes to add value to that property. We're still good so far?
Yep.
Perfect. So then we'll go in, we'll do renovations, and I'll show you what those renovations look like, but we will tailor it towards the vacation rental market. And then what we'll do is we'll go in, we'll add that value, we'll do the renovations, and then immediately we'll refinance, excuse me. So any down payment, anything that we put up front, we would actually recoup that in our refinance. And then we go into the rental management stage where we list the properties on Airbnb, direct bookings, VRBO, and we're able to get really good reservations at really good rates. And I'll talk to you about that as well. So then also too, we can't do it without our team. And so this is just a list of team members that we work with, hospitality, housekeeping, realtors, agents, accountants, designers, the whole nine. And then there's partnership for success. So what we do is we collaborate with partners and investors in three different ways. So one, investors will invest in our projects and they'll make a percentage anywhere between 8 to 12%. And when we refinance, we return their capital back plus interest. Also, if an investor wants to come into Sonoma County and they don't want to do the project management, they don't want to manage a short-term rental or work on permits or anything like that, well, we partner up with those kind of individuals who are investors as well. And how we do that is we'll take them from beginning and end, from the permitting to analyzing a property to refinancing and then running that vacation rental for them. And then there's a third type of investor who already has a vacation rental uh, business or property in the area. And of course, we would just manage it for them. So the investment process looks like this if someone were to come work with us. Number one, they would receive a property analysis package. And then if they like what they'll see, they'll take the agreement to their attorney. And then the private lender funds the deal. The property is purchased, renovated, and then it's listed on the short-term market and refinanced at the same time. So whatever comes first, your vacation rental permit or refinancing, whatever comes first, we'll go ahead and execute. And then for the lenders who invest with us directly, once we're refinanced, they will receive their funds back plus the interest, and then we repeat the process. And so then how are investors funding these deals? So are taking their 401k, they're and they're able to invest that way. Home equity lines of credit, personal savings, those type of things. People are taking money out of their banks now because of the bank closures, and they're putting it into hard assets, and they're letting real estate become their bank. So 15 reasons why our investors invest with us. I won't go through all 15 reasons, but a few that may be, I guess, beneficial or attractive to this particular group is passive income. I know multifamily is about passive income, and short-term rental is very passive for sure. Um, because we do the project management, our investors don't have to deal with the labor, dealing with the tenants or contractors or anything like that. They get to spend more time with their family. They make money while they're sleeping. We've done that over the past few years as short-term rental owners. And as a fun caveat, you get to improve your golf game. So the risk versus reward. So right now, banks, if you have your money in the bank, it's collecting 1%. Some banks are better for sure, but most accounts are about 1%. And so after 12 months, you've earned 1,000 on your 100,000. So investing with us, or well, for our investors at 10%, they're making 10,000 on that same 100,000. And then of course there's some comparisons to stock market versus investing in real estate. You guys are all super savvy when it comes to real estate, so I'm preaching to the choir, so I won't go through all that. But when our private money invests with us, investors invest with us, there's three things that we give them to protect them. So we give them a promissory note for the collateral, for the capital for the project. They are on the deed of trust and mortgage, so they're secured that way. And then they're also added to our hazard insurance as well. So if there's any natural disasters or fires or anything like that, they're covered through the insurance as well. So basically, it helps me sleep at night knowing that anyone who invests with us or anyone that we're helping to manage their investment, that it's safe. And then there's five common ways that we've had investors work with us or fund their own deals, and that's through cash, home equity line of credit, business credit, the retirement accounts we talked about, and investments. So
Hey,
now I want to
Miguel.
show you. Uh huh.
Hey, I just want to jump in because I love what
Yep.
you're presenting. And I think everyone on the call wants to just be able to make sure that they can follow along in all of the different things that you guys are actively engaged in. Can you just answer a real quick question right now, which is in terms of your primary business, what you guys spend the majority of your time on? Can you talk about what part of that business is it that you're spending the majority of your time on right now?
Yeah. So what we do, the more of the time that we spend on our project is really right now analyzing properties, because we're active in the market. We don't want to just be managers. We want to be active in the market.
Yeah.
So we're analyzing properties right now, um, underwriting them, and then after that, really we like to do reverse engineering. So we analyze, underwrite the property, and then we'll go in to the refinance lender and we're asking what criteria do you need for us to be able to refinance once the project is done. So
Okay.
right now we're heavily active in the market and purchasing. So that's what we're doing day to day right now.
And your focus is the Sonoma County marketplace. Airbnb is predominantly your niche. And if people are thinking about, okay, I would like a California investment opportunity
Oh, Sonoma County.
somewhere that is destination related. In other words, it's a world class, it's a global destination for people who, obviously Sonoma is very, very well known for wine country all over the
Hmm.
world. This is a vacation slash historical destination for the whole world.
Hmm.
You guys have been doing this, and how long have you been doing this for again?
Yeah, so we've been in hospitality since 2007. My wife before that. We started our first short-term rental in 2021. And so we realized we had something special. And there's been a lot of different changes in Sonoma County as far as where you can rent, but it's actually been to our benefit. So for the past 2 years, our numbers have actually been pretty good, um, actually excellent for what we have. And actually, I'm going to go over that in about two more slides.
Okay.
No sweat. We just wanted to make sure we kind of followed along because without seeing your slide presentation, we just wanted to get a feel for kind of like the who, what, where, when. Like, okay, we're talking about Sonoma County. We're talking about short-term rentals. We're talking about world-class destination. Now, give us a little sizzle. Tell us a little bit about the numbers. Tell us a little bit about what are investors going to get excited about when it comes to returns?
Oh my gosh, I'm terrible. So you guys can't see my slides?
No.
No, we can't.
Oh
We
my
haven't seen
gosh.
any of your
Okay.
slides.
All right. Well, I'm
Yeah.
sorry about that.
No, and
I
that's why
do
we're talking it through with you
here.
Yeah.
No.
because you've been reading them, but we
Yeah.
cannot see them. So
Well,
just continue.
here's the good news. You don't even need to know how to use a slides presentation to make money in vacation rentals. That's the good news. Okay. So, okay. So I'm glad you said that. Thank you for that. Thank you. So let me do
Yeah.
this. Let me go over the numbers that we have on our vacation rental. And what I can do is I can actually send a link for my slide presentation so
Put it
you
on the
can take a
chat.
look at before and after pictures and all that good stuff.
Yeah, put it on the chat when you can.
Perfect. Yeah, let's do that.
And then if someone wants to go into that, they can on the side, and then maybe they can follow.
Perfect. Okay, let's do that.
So are you guys forming
Okay.
partnerships? It's not a syndication, correct? You're not
This is not a
right.
No, this is not a syndication. So this is just a vacation rental management company. So we're certified to be vacation rental managers,
Okay.
but really we're helping our clients um, really just be able to expand their portfolio in wine country.
Okay.
And so we're good at project management, we're good at finding deals. So
Okay.
we're just working with investors who want to team up with us.
Okay, good.
So
Did you
the
put the link in
numbers,
the
what they
chat?
look like.
Hold on, did you put the link in the chat box?
Oh, here, let me do this. Yeah, let's do this here.
Any questions so far while we get the link on the chat?
And it's important to note too that Sonoma County, by the way, it's so close to Napa that even though we are just talking about Sonoma County, and Sonoma County's got a lot of rich communities and neighborhoods within the county itself, the Russian River Valley and things like that. You're also talking about the next door neighbor to Napa, which is also world renowned. So this is absolutely a global destination, which is why I'm interested to hear a little bit more about the returns, because this is a place that people come from all over, all throughout the year to visit. So, and maybe you can, before you finish your presentation today, maybe you can talk a little bit about what that demand looks like on a year-round basis. Is there any seasonality, or do you find it typically to be strong year-round? So, but please continue.
Yeah, absolutely. No, I appreciate that. It's
Oh, we lost him again.
um, Napa was the number more visited than Disneyland.
You froze there. Can you repeat
it's
that
a very
again?
popular place.
Hold on. Can you repeat that again? You're freezing again. You said something about Sonoma Valley being something more than Disneyland.
Yeah, can you hear me now? Okay.
Yes.
Yes.
Okay. Yeah, no, I really appreciate what you said. At one point, Napa was the number two most visited place in the world. It was more visited than Disneyland.
Very
and
good.
we're only about 20 minutes away from Napa.
Great.
Yeah.
Okay.
So in the link, I sent the website of our actual vacation rental, so you can look at the pictures, look at the property itself. But the numbers look like we bought this particular property at 500,000, which is a steal. We brought it off market. We put about 115,000 in renovation cost into it. Our timeline completion was about 140 days. Recently, the last 3 months, there was a home sold a smidgen outside of a mile from us for 1.2, like 1.25, but I just say 1.2. Our short-term rental income is a little over 100,000 annually. Last year it was 110. It looks like we're going to match that the same here. 2024 we do predict it should be better because we're going to make some add-ons and packages and all that cool stuff. We put 50,000 down. So we currently have a loan for 450, and we borrowed 450 from our private lender. Our private lender made 10% interest over 6 months. So they made about 22,500. So it was a win-win for both sides. The private lender got their money back in 6 months plus 22,500. And we got the property. And it's right now we have a loan for 450, and it's in a $1.2 million neighborhood, and it's producing $100,000 annually.
So let's go through those numbers one more time because it was a little hard to follow with you reading them off. So let's go through it again. So how much did you pay?
Okay. So we actually paid 500,000, but we
And
were
you
required to put
invested how much in the
50,000 down.
improvements? How much in the improvements?
We invested 115,000 into improvements.
Okay, great. And you've held for
And
how
that
many
was of our own
years?
capital.
Yep. Okay. And how many years?
So we've had it since October of 2021.
Okay. So that's 2 years.
2 years. So because
And what do you think it is now worth?
You said a
So the
million.
home it's we have a comparable at 1.25. I like to say 1.2.
Okay, great. And you're bringing in over $100,000 of income a year.
Mm-hmm. Yeah.
Correct. 100,000 in gross income.
Okay, great. So basically, then you bought a property for 500,000, invested 115,000 into it. So basically, the property was worth about $615,000, what we call replacement cost. If it were to burn down, that's basically what you paid plus what you put in. And then in 2 years, you've actually seen the value double to 1.2 million. So that's about a double in value. And that income now represents 100,000, which is a little bit less than 10% of the value of the property itself. But when you compare it to what you bought it for, okay, which was, the 500 plus the 115 you put in, and earning $100,000 a year off of that income that you're getting for Airbnb it and short term and things like that. So in essence, then that 100,000, if you had no expenses, but just based on your gross alone, that would be like having about a 16% return, like just from the income alone. And then obviously you back out your return, but you're still looking at, it sounds to me like you're still looking at over 10 to 12% a year. Is that fair to say?
Correct.
Okay. So
I think the key
who wouldn't be interested in that?
Right. Right. And so the key is definitely finding distress under market value property, because that's really the key, because the lower that you owe, the lower your mortgage, which means once we renovate the property, we're able to charge more. So your profit margins are great. Now, the good
You're cutting up again.
You're cutting out again.
is,
You're cutting
is
out
that
again.
even though the interests are,
You're
is that
cutting
better?
out. You're cutting out.
Can you hear me okay now?
Yes.
Yes.
Okay. So there's been a lot of talk about interest rates, but it's actually been helping us because we're able to find these incredible properties well below market value, make lower offers on the homes because interest rates are so high. So what we notice is that when we're underwriting, that our profit margins are not as great as they are when interest rates are lower. But once we add value to the property and then refinance it at a lower rate, with no prepayment penalty, when it does, interest rates go down even further, we're able to take advantage of that and increase those profit margins, but then still have the equity as well. We'll have both.
Okay.
Hopefully that was okay following.
Yes.
Yeah, no, absolutely. And I think, anyone listening to the call should be putting their name into the chat and sharing this with our guest Miguel, because when you look at this from a dollar in to a dollar out perspective, in other words, how much money, how many dollars will I get back if I put $1 in? I mean, based on just the numbers he's already talking about right now, everyone should be raising their hand and saying, I would like to find out more about how to do this, because these are the kind of returns that, if they are consistent, and maybe Miguel can talk about that next, is how consistent are the returns from a month to month basis. But these are the kind of returns that investors would be very, very hard pressed to find if they were to go to the major cities like Los Angeles or San Diego or San Francisco to try to get these kind of returns on an Airbnb or short-term rental process. It'd be very, very hard to find.
Mm-hmm.
So I shared my information, Miguel.
You're on mute, I think now. Yep, you're on mute. We can't hear you.
Yeah, so I really appreciate that. And what we've noticed is that we're able to look at properties for, I mean, I'll just tell you one I'm looking at now. It's about 2.3, and it has the same square foot, I mean, the same lot size, excuse me, as a home in the same street that sold for $10 million. So what we can do is just confirm with the county. We go in, we add the square footage, we add the pool, we make it look as close as possible. And you just immediately added value with comps where the skies are the limit.
Mm-hmm.
So we're literally going into the best neighborhoods and finding the worst homes.
Well, and that's a great business model. I mean, I think I did that for many years, and it's very profitable, very profitable if you have, if you've got the connections, or you're doing it yourself. I mean, anyone that's looking to get involved in just any kind of real estate investment, this might be, like an easier in, right? Versus like multifamily, right? 200 doors or even 50 doors. This is still a great opportunity to create and possibly maybe even double your capital. So go ahead. I'm sorry. Go ahead, Miguel.
Oh, no, no, no. I'm just agreeing with you for sure. The cost of entry is a lot less
Right.
than if you were going to a, $10 million multifamily. So it could be a good place to start as far as, being able to earn passive income.
Mhm.
Um, or just it's just another way to add to your portfolio.
Absolutely. So Naveen is asking do you share these opportunities by email to interested investors?
Yeah, that's actually, um, I like to, kind of get to know the person that I'm speaking with and go through like a whole, slide presentation, and I'll make sure it's actually working when we sit down one on one, and just go through all the numbers. Absolutely, and just ask, as many questions as you want. Um, and that's really the next step. It's just kind of getting to know each other, and going through all the numbers and what it looks like.
So do you actually have a deal right now?
So there's a number of deals that we're looking at. One just needs, honestly, it just needs to offer. And I'm waiting on a couple responses back from the county. But there's 2 or 3 active deals we're looking to put offers on now.
Okay, fantastic. Well, I mean, I think this is really a great opportunity for anyone that's looking to invest in I would say this is a pretty good market, solid market. A couple things that that you check off is here in California and it's wine country, right? I think that's prime location. So that's really good. Now, tell me a little bit about, and I know we don't have a whole lot of time, but you said that you look for the single, like a home within that community, and that not only do you update, remodel it, you expand on it, but you also said you guys add an ADU to the property. Are you renting the house and then moving on to second phase, building the ADU so that you're collecting income?
Absolutely, Annabelle. So, yeah, we'll go in and we'll take the first property there, so the main home, and of course make sure it's in the vacation rental zone and start renting out and making income, positive cash flow. And then during that process, we're also putting our plans together, and I'll talk to whoever individually, but in California you can now split lots,
Yeah, I
and
hear
you
I
could
hear
put 2 main homes and 2 ADUs. So the expansion is there, but we want to immediately get in there as soon as we can to start producing income through the home that's there.
Now, you've already been involved in a lot split, correct? Project before?
Not in the lot split. So we've done an ADU.
Okay.
So we've done a renovation and an ADU, and we could sit one on one. I have pictures of that too. That was quite the ordeal. I
Yeah.
learned a lot through the county and how it worked, and septic and well, and
Mhm.
so that could be, you can leverage my experience on that one,
Okay.
to get what you want from the property.
Okay. Okay. And what do you think your turnaround time is on finishing the project? What do you estimate?
So my goal is always, if I can't find the property to get it, on a platform, either direct booking or Airbnb or VRBO, in 6 months, then I don't want to do it. I
Okay.
don't want to do it. Yeah, unless an
We're losing again.
investor is okay being patient or wants to build from ground up or something like that, then of course I can help there. But whenever I have investor capital, I want to get it back to them as soon as possible.
Okay. So this is short term. So you wouldn't be doing an ADU or a lot split with an investor. You'd be doing that before the investor comes on board?
So a lot split, I would work. So there's 2 ways. So if we, it just depends on what kind of partnership we put in place.
Okay.
Um, So if someone's partnering, if they just want to invest in my deals, then basically what I'm gonna do is I'm just gonna get the home ready for rent and refinance ASAP. So within 6 months. If they want to do their own deal, then I will help them along the way.
Got it.
So we'll get the home ready to go. I'll help them with the permitting process for expansion. We'll take it from beginning to end.
Okay. Okay. Well, I think this has been great and very informative. And I think this is an alternative to investing. I think, you know what, it's a short term, right? I mean, Miguel is looking to get back your money within 6 months. At least that would be the initial goal. I mean, I think it's a great opportunity. I mean, I know that I'm always open to those opportunities, Miguel, and Paul's open, and I'm sure other people will be open. So make sure to post your contact information on the chat. That way, if anyone would like to connect with you directly, they can. If you'd like to connect with me or Paul, you also can, and we'll somehow direct you to Miguel. Before I kind of go off on another tangent, anyone have any questions? We good? All right, cool. Miguel, thank you so much. Thanks so much for joining our call and for bringing some very good and valuable information on investing.
Oh yeah, absolutely. It's been a pleasure. I always enjoy coming on. I want to thank you for inviting me. And I appreciate you allow me, your platform. And I like the fact that Annabelle, uh, you want me to put my money where my mouth is, right? So not only show the project, but what did I do afterwards, right? I love that about you. So I appreciate this.
Thank you. I appreciate it. And I think that just allows for, you know what, just even a stronger relationship, right? Business relationship. And anything comes up, like you know who you can call and you know who you can talk to. But thank you, Miguel. You're again always welcome to come on our call. And we are here every Wednesday. We meet 2 p.m. Pacific Standard Time, and we talk about multifamily investing. We talk about investing, period. You know what? It's all, at the end of the day, it's real estate investment. So thank you, Miguel. And Paul, before we go, I know you were at NCE a couple of weeks ago. We've got a few minutes, but maybe you could bring us up to speed. Like, what did you see? What did you hear? What's cooking? What's really, really some good information that you can share with everyone?
Yeah, it was a great meeting, and I'll be happy to just share that. I think the biggest opportunity that any of the investors or people trying to learn about investment right now need to learn about is the 1031 opportunity, which is the opportunity to acquire properties with folks that are in a 1031 situation and can work with those people who are doing a 1031 in order to basically partner in their success. Because this is a business about team. You don't become successful in it all by yourself doing your own thing. It absolutely takes a very big team of people. And one of the huge opportunities that at the national meeting last week that I learned about was the amount of money that is coming out of deals and needs to find a new place to go. Mm-hmm. And we're talking lots of deals. And the reason that is going to be absolutely important to learn about in this next coming year is because look where interest rates have already gone this year. I mean, they've gone from being dirt cheap down in the 3s, up to the 7s and 8s. And when you start having those kind of wild variations in the cost of capital, you have to look at all the alternatives that are available to you. And one of them absolutely is the 1031 world, which I was surrounded by for about a week. Lots of deals that are either in the process right now or some that have even closed. They are looking for a home, and that home could be your next deal. and making sure that you understand, kind of the same way Miguel went through today, knowing the numbers is super critical, because people who are in a 1031 situation, they have a clock, and that clock is ticking away. And if they don't find a place, find a home for that money, they're going to lose that tax deferred option, and they're going to subject themselves to some pretty big taxes on their gains. So absolutely, the biggest thing that I'm learning right now is for people who are getting out of deals and looking for that next leg. This is a huge opportunity, a huge place for people like ourselves to basically have meetings with 1031 sellers who need that up leg, and absolutely can find alternative financing for their deals. I've been talking to a couple different people who have multiple 1031s, probably are going to fund 4 or 5 deals in the next 30 days, because the money's got to go somewhere. So that's what I'm excited about. And I'd like to share more about that next week when we come back on. Perfect. And talk about, well, why and how, and is that something I can do, and answer all those questions, because absolutely it is one of the greatest ways to find new opportunities is with people who are already making things happen, who have sales or are in the middle of a sale, and take those dollars and put them to work into your deals and partner. It's super critical. I can't explain how important it's been. And Annabelle, you've been sharing with everybody week by week that, this is not a solo sport. It is absolutely a team sport. You have to rely on everybody, your lawyer, your accountant, your bookkeeper, your construction people, your rehabbers, your property managers. Everybody is an invaluable part of the process. So more to come next week.
Fantastic. Thank you. That's awesome. So please join us next week. Paul's going to be really diving in a little bit more on what's going on right now, and how this could maybe help and benefit anyone that's on this call today. So thank you, everyone. We'll see you all next week, Wednesday, 2 p.m. Pacific Standard Time. And join us here to talk about multifamily. Thank you, and have a great day.
Thanks, Annabelle. Thanks, Miguel.
Take care.